The American dream of owning a home has gotten a lot more expensive in the last few years due to a few factors. 1, inflation. 2, higher interest costs. And 3, lack of inventory, a great decrease in the supply, which was largely driven by the increase in interest rates. And guys, that Fed meeting occurred. This is the expectations for the next meeting for June 12th, 2024, 99% chance of keeping rates the same. And guys, look at this. 1.1% chance of a rate increase. When was the last time we saw that? Reminder, we don't know what's going to happen in the future because just 5 months ago, everyone was expecting 6 or 7 rate cuts this year. And we're now going to June where it's a 99% chance rates will still be the same of where it was, and they're calling for cuts and a 1% chance of an increase. Remember, when it comes to cutting rates, that happens when the Fed is trying to spur the economy because things have stalled out. We don't want that. That means a recession. That means companies are going to make less money, less people are going to be employed, etc. So when I hear people rooting for rate cuts, I think to myself, you don't understand the basics of economics. Luckily for you guys, you're watching this channel, you're learning, and hopefully you're realizing, hey, you know what? This guy sounds pretty rational. A lot of people out there are talking about a housing crash, and I think that that's a little premature. My personal opinion, like I said 2 years ago, is higher rates won't necessarily lead to a decline in home prices. Now, what was the report that came out? Well, here's what happened, guys. U.S. home sales posted second straight monthly drop, but house prices accelerate. Well, what were the exact numbers here? When I first heard this, I thought, oh, inventory must have kept going down. Home sales fell 1.9% in April, but housing inventory increased 9% to 1.2 million. Now, how does that 1.2 million compare to recent numbers? We had upwards of 4 million houses for sale at one point. That's a big decline in inventory. Median house price rose 5.7% to $407,600 from 1 year ago. So 1 year ago, it was well below $400,000. Now it's at $407,600. So this is tough for people. Remember, if you're out there and you have 3 or 4% interest on your home, when will you move? You're going to move only when you have to move. Job relocation, major change in life like a divorce or something like that. Or if you need to expand your house because you're having kids, or downsize because you don't need that house anymore because all your kids are gone. So unless you have to move, you are not going to move. And that's what's going to keep inventory down probably for some time. I think this inventory issue is helping home builders a lot. Why? Because they can build a home, and instead of getting into a whole entire battle for pricing and all this stuff, you can sit there and move right into the home you want at a predetermined price. And once it's finished, you're moving in. I think this is going to help home builders. And guys, I hate the housing crash comments. We had a housing crash in 08 and 09. But do you know what that took for that to happen? We don't have the same elements of today. We don't have the levels of fraud in housing. We have those levels of fraud in crypto and other things, but not in housing. We have a lack of inventory. We have inflation. When we have inflation, costs to build are going up and up and up, and people's incomes might be a little behind, but they'll eventually catch up over time and allow people to pay more for houses. Plus, if you bought a house 5 years ago and the value is doubled, you have a lot of equity to put as extra down payment on that home that you have that you want to buy. Now, guys, if you're new to the channel, or even if you've watched us, make sure you subscribe. We do 4 or 5 videos a week on this Everything Money 24/7 channel. Market, economy, business reactions. We're here to get the information out as soon as possible. It's a great place for you to get an update on some of the biggest news stories of the day. This is a big news story. 1.9% decline, which surprised a lot of people. So a lot of the bears out there are going to sit there and say, oh my God. And guys, by the way, if you're on Twitter and Instagram, please, when somebody's sitting there saying, look at 40 years ago, a house cost $50,000 and income is only up, but housing costs are up 8 times, income's only up double. That's not true. They're comparing inflation adjusted income 9 times out of 10. You need to look at nominal income back then versus nominal income now, not factoring in inflation. So please watch for that. I see everybody on Twitter. And by the way, if you're on Twitter, follow me at EMPaulG. That's my Twitter. I like to talk about a lot of things on there, economic related, business related, etc. I'm very active on there. But guys, you've got to remember, don't fall for that fudster stuff. Trust me, I look at the stock market and say, yeah, there's a bubble there. And I sit there and say, there's probably going to be a likelihood of a crash at some point. When? I have no idea. With real estate, I'm not so convinced. I just look at it saying there's a lack. Remember, everything's about supply and demand. The demand might be lower for homes, but the supply is significantly lower. That's why prices keep going up in addition to inflation. And if you think I'm making this up now, go look at my past videos on our other main channel a year and a half, 2 years ago. When I sat there and said, I don't think interest rates are necessarily going to cause a housing crash. I don't believe in that. So again, subscribe to the channel to get more updates on this. Now, I just went and said I think that these housing prices and things will help builders. But look at this. New home sales down in the Northeast dropped by nearly 21%. That's in the Northeast. Overall, sales of newly built homes in April fell in April. New home sales fell 4.7% to an annual rate of 634,000. There was an uptick in interest rates, and builders are blaming that for the case. Remember, it's month to month, and I get that. But new home sales being down kind of makes me, okay. Remember, I've talked about other companies like Target, Home Depot, and Lowe's. Home Depot and Lowe's are two companies I'd sit there and say their same store sales are down. That means people in a certain area who had their Home Depot or Lowe's for a long period of time, the sales are down significantly from a year before, 3 or 4%. That to me tells me there's probably more going on with the consumer than we're letting on. Is the consumer weakening a little bit? Perhaps that's the case. New home sales being down, not the best. The expectations were 675,000 for April. They came in at 634,000. That is a big miss. So where are home prices going from here? Remember, it's short term. I don't know, but I still look at inflation being the friend of real estate, lack of inventory being the friend of real estate, mortgage rates going up, not the best. The Fed came out yesterday, and Fed Chairman Powell did say that there are some people on the committee who've been pushing for higher interest rates. So I look at that saying, okay, the economy is going to do what it's going to do. The whole point for you is, do you live in a home you love? Do you have to move? These are the decisions to drive home prices. Don't worry about where they are at any given time. We're here to teach about making good investment decisions, and if prices fall further, you make more of those decisions. For a home, if you're in a home you love and you're going to be there for a long time, none of this matters for you. Don't worry about any of this crap. It's all just noise. If you need to move, consider renting. If you need to move, but you're going to be there a long time, figure out a way to make it happen. And the good news is, eventually if rates do go back down, remember, I don't believe they're going back down to 3% anytime soon or ever. For that to happen, we would need probably a pretty big, bad economic event to occur. So when I hear people saying, don't worry, just refinance in the future at much lower rates, we're about where rates have been historically. And that's okay, because here's the good news. If you have a higher interest rate in your home, you have an incentive to pay down that debt faster. When it was 3%, I was telling people, don't pay off your mortgage. At 7 or 8%, yeah, consider it. Start paying that mortgage down. You're giving yourself that guaranteed 7 or 8% return, which is higher than you can get putting your money in 90-day treasuries at 5.4%. But one place where home sales did increase, Midwest, baby. Midwest. I love it. Why? Guys, in the Northeast, Southwest, all these growing markets, builders were just building and building and building and building and building. In the Midwest, slower growth, builders are being more cautious about building. We're only going to build when we have certain demand, certain sales. The Midwest coming in hot, and it's cheaper there. It's cheaper to live here in the Midwest. I love the Midwest. Everybody else in the country can suck it. Guys, thank you very much for your time. Do me a favor, subscribe to the channel. I'll see you in the next video.